As far as price targets, we've thrown out one before that people chuckle at, and that's $8,000 gold. Well, all that is looking back at the prior two major bull markets and looking at the multiples that were gained by gold then, based on far less dramatic fundamentals. And if you do it again, you're going to get 8,000. That's just routine. That's just another echo effect of the prior two.
We see the dollar going down and down and down, then the 8,000 target, which Michael was referring to, becomes not, something like a pipe dream or something, an exaggeration. And only then do you find a situation where you get a panic out of fiat currencies into gold. Now, at that stage, you could say that gold is actually beginning to rise.
Since the beginning of the year until March 26th, 2024, the price of gold has steadily risen. Starting at $2,066.32 per troy ounce, it climbed to $2,187.60, marking a 5.87% increase. This surge in gold prices is not a recent phenomenon, according to renowned analyst Michael Oliver. He traces its origins back to December 2015, when gold hit a low of $1,046 per ounce. Since then, there has been significant growth, with the price doubling by 2020. This pattern mirrors other bull markets over the past 5 decades, such as the surge from the mid-1970s to the 1980s and the rise from $250 in 2000 to $1,920 by 2011. These bull markets involved substantial gains over many years. In terms of price targets, Michael anticipates that projections of $8,000 gold aren't far-fetched, drawing from historical trends and the multiples gained in previous bull markets. One factor influencing the rise in gold prices is its inverse correlation with the US dollar, which has weakened over the past 3 weeks due to the Federal Reserve's uncertain stance on interest rate cuts. This dollar depreciation has contributed to propelling gold to its current record high. Alasdair Macleod identifies the weakening of fiat currencies, particularly the US dollar, as the primary driver behind the ongoing gold rally. Without gold backing, fiat currencies tend to lose value over time, as governments can expand the money supply without immediate repercussions, leading to currency devaluation. Thus, the surge in gold prices reflects more the erosion of fiat currency's value than any inherent strength in gold itself. Alasdair predicts that as the dollar continues to weaken, targets like gold hitting $8,000 per ounce become increasingly feasible. With waning confidence in fiat currencies amidst global uncertainties, individuals increasingly turn to gold as a reliable store of value and hedge against economic instability. We will present clips from Alasdair Macleod and Michael Oliver's interview with Jay Martin. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
First off, this gold bull market is not a new one. Okay, it began in December of 2015 at a price of 1,046 low in US dollar terms. Okay, so we doubled between then and 2020. And by the way, other bull markets over the last 50 years, you can look at the mid-1970s to the 1980, that's 7-8 years of upside from $30 range to 850. And then you went from 250 in the year 2000. And by 2011, you were 1920. So, a huge multiple gain, but a lot of years involved there. Okay. Same here. This one's now, getting into its 9th year or so. So usually at the tail end of those bull markets is when the cataclysmic events start to occur, that suddenly everybody wakes up and realizes what's been going on. And you also get price drama in the late part of those bull trends. I think that's what we're facing this time. Now, we measure that a couple of ways. And one is the spread relationship between silver and gold. You can plot it, And then we do momentum studies of that spread. And right now, I can tell you, if you get much more uptick in the price of silver in relation to gold. Now, if you go back to the February low, silver's outperformed gold. So have the gold miners. They've doubled the performance of gold from the February low I'm talking about. So in the recent surge, they beat gold. If they continue to do that just a bit more, they're going to go into first place again, where they outperform gold going forward, which is typical in the latter phases of major bull markets. So as far as price targets, we've thrown out one before that people chuckle at, and that's $8,000 gold. Well, all that is looking back at the prior two major bull markets and looking at the multiples that were gained by gold then, based on far less dramatic fundamentals. And if you do it again, you're going to get 8,000. That's just routine. That's just another echo effect of the prior two. And given the fundamentals that Alasdair is aware of and that I'm aware of, this could be far worse. And also, I don't expect it to be arm wrestling. A lot of this bull market in the last 9 years has been arm wrestling process. You gain 2 steps, you pull back 1, you bore the heck out of people, you spook them. But finally, in the latter phases of the bull market, you get the exaggerated moves with speed and dynamics. And I think we're on the cusp of that right now.
Now, if you understand that it's the dollar going down, not gold going up, then you can deduce 2 things from that. First of all, if we see the dollar going down and down and down, then the 8,000 target, which Michael was referring to, becomes not, something like a pipe dream or something, an exaggeration or, my God, this is a speculation. It becomes actually quite understandable. And only then do you find a situation where you get a panic out of fiat currencies into gold. Now, at that stage, you could say that gold is actually beginning to rise because of the weight of, if you like, the weight coming out of credit, trying to get the hell out of collapsing credit. This is the crack up boom, if you like, which will drive up the gold price relative to these fiat currencies. But I think that's the key thing. The way to look at it is it's not gold going up at the moment. It's currencies going down because they've got no anchor in value whatsoever. And I mean, the other thing is that, people sort of think that this is tied, if you like, to the quantity of money, the sort of the monetarist approach. I mean, there is obviously, a quantitative factor in this. If the central bank expands credit, then it's going to tend to undermine prices. But what these currencies really depend on at the end of the day is not, interest rates, whatever. It's faith in the currency. And what we are seeing, particularly with the geopolitical developments that we've had in the last 2 or 3 years, is we're seeing the faith in the dollar actually being badly eroded. And that is why the relationship is that the dollar is going down, and it makes it appear as if gold is going up.
The silver market has been on a downward trend, resembling a staircase since 2022 and 2023, continuing into 2024. However, this month, there's been a notable surge in silver prices. Michael sees that a breakout seems likely if silver manages to close this month above $25.27. This potential breakout would signify the end of the sluggish phase and could mark the start of a significant upward movement. A similar scenario unfolded in 2020 when silver jumped from $14 to $30 in 6 months, catching many off guard. Michael observes a similar momentum structure in the gold mining sector, particularly with GDX. Despite appearances, GDX's annual momentum has remained flat for about 2.5 years, indicating hidden strength not reflected in the price. If GDX manages to close above $31 this month, it would confirm this underlying strength and could potentially shift market sentiment. Despite silver's price targets, Alasdair raises a significant concern. Recently, there's been a notable surge in silver deliveries on the COMEX exchange. Initially, it was suggested that the Indian government might subsidize silver production for their solar panel industry, which was viewed as a political strategy. This year, COMEX silver deliveries hit 1,221 tons, far beyond typical volumes. While COMEX contracts usually settle financially, this surge highlights intense industrial demand for silver. Experts, including Alasdair's sources, believe this demand could disrupt China's control over silver prices, potentially reshaping the market's dynamics. Let's get back to the interview.
But in the case of silver, we've spent since 2022, 23, and into 24, 2.5 years now, where if you look at the price of silver, it's sort of a staircasing down, but it's irregular, whereas you can't really draw a good line. It doesn't have multi-points that all line up or a flat ceiling. But when you look at annual momentum, it's a perfectly flat ceiling. I mean, we've hit it like 3-4 times. It's a very shallow level on the oscillator. I mean, silver gets only a few percent above its 36-month average and pulls back. Does the same thing later. So you built a structure, which you cannot see on price, which is the kind of thing we look for in momentum. You're at that structure now. In fact, if you close out this month, we do it on a monthly closing basis, at 25, 27 or higher, you're breaking out. And we've traded above there this month using May silver. And we're slightly below there now, but there's a week and a half to go. You close 25, 27 or higher, and the number adjusts down about a dime a month, by the way. You're launching. As far as we're concerned, you will see over the subsequent 6 months a likely technical launch in silver where its dynamics suddenly go from this sloppy holding pattern we've had for the last 3.5 years to something that surprises people. Much like, remember the 2000 March 2020, July 2020, silver went from $14 to 30, 6 months. Okay, people were shocked by that. There was a similar but lesser structure then on momentum. This time we have a pristine. If you saw the momentum chart, you would say, "Oh boy," but most people don't see it. And I'm saying right now we're on the cusp. Miners have something very, very similar using GDX. It has an annual momentum structure where at its 36-month average, it's bumped it for 2.5 years. So it's a perfectly flat structure. You do not see it on price. So again, as technicians looking at the momentum, the structure, I'm telling you, you're on the cusp right now. All you have to do is close out this month basically a point higher than we've been in GDX this month, meaning get up over 31. And silver's already been above its number. So, and at that point, I think the tone will change in the market. Silver, I think, will rapidly blow through the 30 level. Over the next 5 to 6 months, silver will probably be somewhere well between the $30 high we saw in 2021, actually, and the $250 highs. It'll be some way up into the 30s.
I'm sure you will have noticed that in the last 10 days or so, an enormous amount of silver has been stood for delivery on COMEX. And it, when I originally looked at this, a source in the industry told me, well, the answer to this basically is that the Indian government are subsidizing photovoltaic cell production. This is obviously the new big thing. And, I can see from the Indian government's point of view, it, if you like, gives them some sort of argument against, the critics who are saying, but hold on, you're opening coal-fired power stations, the sort of thing. This is essentially political. But the point is that Reliance Industries, one of the big conglomerates there, is involved in this business. And it was opening this very month, the first phase of its new production facility, which is to produce, I think it was over 5,000 of these, 5 million or 5, whatever the number is, huge numbers of these photovoltaic cells, and they're expanding the factory to go up to around about 20 billion, 20 million, whatever. I can't remember how many zeros we're talking about. But you can see that there's a lot of silver demanded. And when you look at the amount of silver that's been delivered on COMEX this year alone, it amounts to 1,201 tons. This is an enormous amount. This is not a market where deliveries were really meant to take place. I mean, the idea at the end of the contract is it sort of ties the contract value into the physical price. But, this is not an invitation to deliver. But that is the way it has gone. And the reason it's gone that way is because of this enormous demand, industrial demand for silver. And I think, and my sources also think, that this is going to lead to China losing control over the silver price.
Based on the recent performance, it's clear that gold prices have been on a remarkable upward trajectory. Gold has breached 3 consecutive all-time record highs within the last 2 weeks alone, surpassing $2,159, $2,180, and $2,222 per ounce. If this trend continues, it's not impossible to envision gold reaching even higher highs. Many experts have predicted that gold could soar to $8,000 per ounce, and the consecutive record highs witnessed recently only reinforce this possibility. What are your thoughts on the future price movement of gold and silver? Do tell us in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.